Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks gain on easing trade tensions between Washington and Beijing. Investors in China look past the weakest economic growth in a year, while Japan rallies on news of a coalition deal. Ukraine's President Zelenskiy calls for the war to be frozen ahead of peace talks with Russia, as President Trump shrugs off concerns that he's being manipulated by Vladimir Putin. Plus, the Israeli military says it will return to enforcing the ceasefire in Gaza after carrying out airstrikes on Sunday. It says they were in response to an ambush by Hamas in which 2 Israeli soldiers were killed. Good morning, happy Monday. So the easing of the mood music when it comes to US-China relationships and what we've been hearing, of course, from President Trump, turning into a positive sentiment, it seems, feeding into a positive sentiment when it comes to the equity markets after the losses of around 1% for European stocks by the close on Friday. Today, European futures are pointing higher by about 0.8%. And we'll get to the Asian market session as well and the details there, because that's been strength that you've seen coming across the Asian market this Monday. FTSE 100 futures looking to add 31 points. S&P E-mini stateside pointing higher by 0.4%. And Nasdaq 100 futures looking to add 123 points. The focus, of course, on that tech-heavy index in the lead-up to a week where we get a kickoff of Mag 7 earnings with Tesla reporting on Wednesday. Let's flip the board and have a look cross-asset then. The benchmark 10-year yields back above 4% on the improved sentiments when it comes to US-China. We know that talks are going to be taking place between key officials led by the Treasury Secretary in the US. Of course, later this week, those talks expected in Malaysia. And we are hearing from the US they still do expect that meeting between the 2 presidents coming up as well in Korea. In terms of the 10-year, currently at 4%, just over 4%, having crossed below that last week as money moved into the 10-year. Today, euro-dollar at 116. Strength for the single currency, even as you get a downgrade and an unexpected downgrade coming through from S&P on France, and the credit rating there being cut from AA to A. 116 on euro-dollar, the single currency up close to 0.2%. Brent at $61 a barrel, and gold seeming to lose a bit of momentum, still near those record highs at 4,266, up 0.3 in the session today, but maybe taking something of a breather given the incredible run-up that the yellow metal has had year to date. Let's cross over to Asia right now and check in on the market strength there with Winnie Su in Hong Kong. A focus, of course, on the China data, but also the politics of Japan.
Yeah, morning, Tom. It seems to be a pretty decent rally here in Asia today, and we're seeing MSCI Asia up nearly 2%, which pretty much reversed all losses from Friday. Now, that's really being driven by this whole cooling down of the U.S.-China tensions. As you mentioned earlier, how Trump is expecting to still meet President Xi in just a few weeks, and also Scott Bessent to be meeting with China's He Lifeng later this week. So that's supporting the overall risk sentiment, especially with gains in the tech sector leading. Now, also looking at what's been leading the overall gains in the region are the Japanese stocks. We see that the Takaichi trade is still back on track right now, supporting the Nikkei 225 to jump to an intraday high earlier today. And that is driven by what we've been hearing late with the latest development around the domestic politics about how the LDP and the Ishin pretty much have broadly agreed to form a coalition, which pretty much puts Takaichi in a certain certainty for to become the next prime minister for Japan as we unveil the votes tomorrow. Now, it's really driving the optimism around stocks and also pressuring the yen because she's known to be pro-stimulus and also pro-monetary easing. As you mentioned just now, today another focus is on the China GDP numbers. We are seeing overall Chinese stocks up across the major gauges, and that's, yes, being supported by the overall easing of the U.S.-China tensions and also the expectation for the fourth plenum as we are unfolding that this week, but also that mixed data from the latest set from the economic numbers. We are seeing a bit of a slowdown when it comes to GDP numbers compared to last quarter, but it still modestly beat analyst expectations. And right now we're hearing from strategists that this is still pointing to the government to roll out more stimulus to support the domestic consumption.
OK, and we'll see if that comes through in the statement on the back of the plenum, of course, that starts, as you say, later today. Winnie Su in Hong Kong, thank you very much. Now, markets are waiting for the outcome, of course, of a meeting between US President Donald Trump and Chinese counterpart Xi Jinping, as Winnie was saying, to see if they can reach an agreement on global trade. Ahead of discussions between US Treasury Secretary Scott Bessent and Chinese Vice Premier He Lifeng this week, President Trump revealed he would hold talks with the Chinese leader later this month.
We'll see what happens with China. I've always had a great relationship with him, as you know. But they're always looking for an edge. You know, they ripped off our country for years. We're going to meet in a couple of weeks. We're going to meet in South Korea, actually, with President Xi and other people, too. But we're going to meet. We have a separate meeting set up.
Well, for more on the talks between the US and China, let's bring in Bloomberg's Jill Deesis in Hong Kong. So, Jill, Presidents Trump and Xi both slowly moving closer, it seems, to, well, certainly markets are betting on a rapprochement of sorts. Are they right to, when it comes to the trade relationship between these two countries, given the tensions that currently exist?
Well, look, Tom, I think that at this point, really what you're seeing is that these two leaders have, they seem pretty committed to actually making this kind of a meeting happen. I realize that tensions have ratcheted up quite a bit over the last week or so, but, you just heard from Donald Trump there. I think, the U.S. is still motivated to put a meeting on the calendar with Xi Jinping. That's certainly something that we've heard from the Treasury Secretary, Scott Bessent, for the last couple of weeks now, something that they're really, really pushing toward. And I think that with these upcoming talks happening in Malaysia, where the U.S. and China are ultimately expected to hash out some deals, that does also seem to pave the way for a pretty smooth visit by the presidents to the region, and then ultimately with this meeting that's expected to be perhaps in South Korea at the end of the month. Whether they can actually sort out all of the issues between them, I think is still open to interpretation here. One thing that we did hear from Scott Bessent just last week was that maybe there could be another pause on the table if they're able to reach some concessions. Again, I think that's still very much an open question, but it does seem at this point that, everything's a go for at least getting these two leaders together at the table.
OK, so that meeting is likely to happen. Jill, what is the expectation from you and the team in terms of what is most likely achievable in terms of agreements between the two sides? President Trump has been listing his own concerns. What for you and the team is in focus in terms of what they could actually bridge this divide with?
Well, look, Tom, I think, that Trump laid out pretty much the three biggest issues that are really facing these two countries right now. You've got, his concerns about fentanyl, which maybe that seems a little bit more achievable, given that China has already taken some steps to address, some of those with some drug curbs earlier this year. So that's one thing that Trump has listed. Another thing is soybeans. China has halted purchases of U.S. soybeans recently as kind of a point of leverage. I think that's another, we'll see what actually happens there. But the big one that Trump said that he really wants to resolve here is this issue of rare earths. I think that this might be, the most difficult thing for these two sides to ultimately agree to. So China controls a massive supply of, the Earth's capacity of rare earths materials, something that's used in everything from electric vehicles to fighter jets. What really ratcheted up tensions recently was that we had China actually institute new export curbs on sort of shipments of rare earths. Now, I think, that's going to continue to be a major sticking point when it comes to these U.S.-China negotiations. Whether we can actually see some kind of a breakthrough there, I think that'll be a really, really big tell as to how much tensions are actually easing, because, that's something that the U.S. actually thought they had reached an agreement on earlier this year when these two sides held talks in Geneva. We really haven't seen a lot there. And I think if you're China, you're looking at this particular issue and you're saying that's really the biggest piece of leverage that they have in any kind of a trade negotiation. So that's the one I'm most looking out for, whether or not they can actually have a breakthrough. I think, again, that's much trickier, but that would be a very, very, very significant breakthrough if they're able to reach an agreement that both sides are satisfied on.
OK, with global ramifications, of course, of any agreement when it comes to rare earths. Bloomberg's Jill Deesis in Hong Kong. Thank you for the context. As we look ahead to that meeting between the two presidents that, for the now at least, remains on track, and the meetings, of course, of their commerce secretaries later this week in Malaysia. Meanwhile, China's economy has slowed for a second straight quarter, growing at its weakest pace in a year. Bloomberg senior China economy and government reporter James Mager is in Beijing. James, it's pretty interesting to see from the data that the export engine of China continues to tick over at a pretty decent pace, even amid all these tariffs. But it was investment, it's the real estate sector. There is still concern about this economy.
I mean, I think the data we saw today, as you described correctly, was really just a confirmation that China's economy and the strong growth that we're seeing in China's economy towards the government's target this year is still being driven by really strong exports and is still being undermined by very weak domestic demand, especially in housing, but also in infrastructure investments from local governments, from weak consumer spending. And I think that really shows the more fundamental issues that exist on the trade front between the US and China, between Europe and China, between China and other countries. What you're seeing is an economy which has massive overcapacity in many sectors. You know, the Chinese don't like to talk about that, or the Chinese government has denied that overcapacity exists, but there is clearly still too much production of steel, production of aluminium, production of copper, production of cement, and this is really driving down the domestic economy, and that is being partially solved by shipping those goods overseas. And so I think even if you see some kind of agreements being made in Malaysia, or you see some kind of agreements being made in South Korea on these kind of like very temporary issues like soybeans or the rare earth curbs that China put in place this year and is now maybe going to negotiate some kind of rollback or some kind of like easier access to rare earths now, the more fundamental questions between the US and China, between China and Europe, are basically being driven by domestic Chinese economic problems. And you're really seeing that in today's data, that those problems are not going away. Those problems are getting worse in some cases. The drop in investment is really quite serious. Partly that is because the Chinese themselves are trying to deal with the overcapacity questions they have. But the Chinese domestic economy engine, or the domestic economy side of the Chinese economic engine, is really not firing on all cylinders. And that means that the broader problems about China over-exporting and that overcapacity is going to continue to be a huge issue, even if there is a friendly meeting between Donald Trump and Xi Jinping at the end of this month in South Korea.
And James, there is this major political meeting, of course, taking place in Beijing this week. When you think about those domestic challenges that you've just outlined for us, how central will they be, do you think, in terms of the conversations this week amongst political leaders in Beijing?
I mean, I think it's going to be very central to the political discussions. It's not like people here don't know about this. This was identified. The overcapacity issues in some sectors was identified in the work report this year, which is the government's blueprint for the economy for the year. It's been discussed for years that they need to rebalance their own economy to be more driven by domestic demand, driven by more domestic private consumption, and less driven by investment and exports. There has been some, stilted progress towards that. There was a boost this year through subsidies for people to go out and buy new TVs, go out and buy new electronic goods. But how much they will actually do to truly try to not just have a temporary boost from encouraging people to buy more EVs or buy more TVs, but really change the structure of the economy so that the consumption side, that private consumption in China steps up and takes the production that is available, is really going to be in focus. The conflict here is that the government in Beijing still wants to be an industrial superpower that is not only producing everything for the domestic economy, but is also a massive exporter. And the contradiction, I think the central contradiction is they want to be a huge exporter, they want to rely on investment and exports and that industrial side of the economy to drive growth, but they also say they want to rebalance the economy towards consumption. And there really isn't the money to do both. So they have to choose at some point. What they will choose, I guess, we'll gradually start to find out from Thursday this week when the results of that plenum start to sort of come out in state media.
OK, we watch for Thursday then, and that's a great setup for us and a breakdown of the data that came through today as well. Bloomberg senior China economy and government reporter James Mager. James, thank you. Now, concerns about the state of credit markets in the US has led to a rally in US Treasuries. We saw the 10-year drop below 4% last week. It's just back above that now. Let's bring in Bloomberg's Sree Taitel in terms of the flows and the concerns about the credit market. Do those concerns continue, and what is it doing across the Treasury curve, Val?
Well, look, I think last week's price action showed us that Treasuries are a safe haven. Again, we had a rally, but kicked off by two different topics. First, it was those China trade tensions escalating. Then it was those credit worries focused in the regional banks. So 2 rounds of Treasury market rallies, both at least showing that Treasuries are a safe haven still in some aspects. We did on Friday even break out even farther. The 2-year yield dropped below 340. The 10-year yield dropped below 395. It hit its lowest since April. So those are kind of those stretch levels we hit on Friday. The concerns now is that the Treasury rally might be over. We're seeing tensions with China de-escalate. Worries over the regional banking credit scenario really were relieved on Friday. So perhaps we're headed for a week of steadily higher Treasury yields as we head into that U.S. CPI report, not due until Friday. But Tom, we could have another catalyst for weakness in fixed income, and this one could really come from Europe. The French OAT bond market already suffering some losses if we look at what's going on in OAT futures. They are underperforming their German counterparts by around 1 to 2 basis points already. And this is on the back of the surprise downgrade from S&P Global on Friday. It was an unscheduled move, Tom. It is now the second major rating agency to drop France's AA rating. Now, this could start posing some questions for the market of whether we start seeing some forced selling by ultra-conservative bond funds that need an average AA rating to hold this paper. So that kind of speculation ahead of month end might drive losses in the OAT market. But this is just a reminder of where we stand with the big 3 ratings agencies. S&P and Fitch, as I mentioned, both dropped their AA rating recently. The last one standing is Moody's. They're currently the lowest rung of AA, AA3. They are on a stable outlook, but Tom, they do have a ratings review coming up on Friday. The market concern here is we could see yet another drop of a AA rating.
Bloomberg's Sanae Takaichi, thank you very much indeed. Coming up, Japanese markets, meanwhile, ticking higher on the prospect of a pro-stimulus leader as Sanae Takaichi moves closer to becoming Japan's first female prime minister. More details on that coalition next. Plus, President Zelenskyy calls for a freeze in the war in Ukraine to allow peace talks. We'll discuss what that might look like later in the show. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Japanese stocks are rallying. They are on a tear this morning on news that the ruling Liberal Democratic Party will sign a coalition deal later today. It paves the way for Sanae Takaichi to become the country's first female prime minister. Let's get more on that story with our Japan economy and government reporter, Alistair Gale. Alistair, significant news then out of Japan. What more can you tell us about this deal?
Well, Tom, there's been very extensive talks over the weekend between the Liberal Democratic Party and the Japan Innovation Party, which is a third largest opposition party here in Parliament, who is now going to join the government. And they've decided to form a coalition with the LDP, which has been looking for a new partner after their previous coalition partner, Komeito, dropped out. And all of this is very good news for Sanae Takaichi, because she was recently made the president of the LDP and she's hoping to be prime minister. We're expecting a vote tomorrow to decide who will take that job in Parliament. And now she knows pretty much, she's assured that she'll get that job. And that's history really being made here in Japan. First female prime minister, and then she can get to work with her policy agenda. So it's been a very successful weekend's work for her.
OK, history being made in Japan. The equity markets, as I mentioned, of course, are rallying on the back of this news in Japan. Talk us through the market reaction.
Sure, as you say, I mean, the Nikkei has been up 3% today. There's been some uncertainty about whether she would succeed in finding a new coalition partner. That's all now being cleared up. So I think what we're seeing is people saying, OK, we're looking at a Takaichi government. How should we position for this? You know, we've seen the Takaichi trade when she was first confirmed as president of her party, which is really to buy stocks, sell the yen, sell bonds. And now that there's clarity about the fact that she's going to be the next prime minister, I think people are leaning into that trade once more. Obviously, once she gets that job, the road ahead is full of challenges. She's got to go to various foreign meetings. She's got to deal with inflation here in Japan, which is the biggest concern among voters. So whether or not she'll push through with this platform of fiscal steps to try and boost the economy, whether or not she'll put pressure on the Bank of Japan to sort of hold off on interest rate rises, that really remains to be seen. But what people are expecting is that generally the approach that she'll take will be similar to former Prime Minister Shinzo Abe, who did use aggressive fiscal steps, who did put pressure on the central bank, and people are expecting more of the same from Takaichi.
OK, Bloomberg's Japan economy and government reporter Alistair Gale. In terms of the history being made when it comes to the leadership in Japan. Alistair, thank you for that update. With equity markets in Japan rallying in the session today. Coming up, we will switch focus because Israel has struck Hamas in Gaza and has suspended all aid shipments, according to reports. We discuss the state of that ceasefire next. Is it still really holding? This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Israel has launched strikes against Hamas after blaming the group for a lethal ambush that killed 2 soldiers. This also halted the transfer of aid into Gaza until further notice. Bloomberg Horizon's Middle East and Africa anchor Martina Pasecci is in Dubai. Martina, bring us up to date then with the pretty disturbing developments over the weekend.
Yeah, that's right. An escalation in tension on both sides, Tom, and the biggest yet since the implementation of that ceasefire just over a week ago now, about exactly a week ago. But what happened is that Israel accused Hamas militants of ambushing an IDF vehicle over the course of the weekend, which resulted in the killing of 2 IDF soldiers. In response to that, the Israeli Prime Minister vowed to retaliate. And the retaliation did come throughout the course of Sunday yesterday, with the IDF launching 100 airstrikes over various parts of Rafah and Gaza. In response, the Gaza government media office now saying that Israel has killed at least 97 Palestinian and injured 230 others just since the start of the ceasefire. Israel have also said that they temporarily halted the shipment of aid into the Strip. However, by the end of the day yesterday, Israel reiterated, the IDF reiterated that they plan to enforce the ceasefire. Hamas as well, saying that they are committed to the implementation of the ceasefire too, but still representative of a very tenuous situation we're still in, Tom. And yes, we've spoken about the safe return of the hostages, the living hostages, back to Israel, but there's still about 16 bodies still unaccounted for. And Israel, the Israeli government, very keen to see the return of those bodies. Many of those corpses buried beneath rubble, so have been difficult to retrieve. At the same time, the U.S. is keeping their focus on maintaining the ceasefire. You can imagine that President Trump personally has a lot of vested interest in this. He had said that the ceasefire is still holding. And we know that the senior mediator, Steve Witkoff, alongside Jared Kushner and potentially J.D. Vance, so that hasn't been confirmed yet, will be heading to the region this week to ensure that there are no further violations of the ceasefire, to ensure as well that Hamas remain committed to the return of the bodies, and then also to ensure the return of the much-needed humanitarian aid back into Gaza again. And those are all first parts of the phase 1 of the deal. But of course, some of the bigger questions remain around Hamas demilitarization and the future of Gaza and where those reconstruction funds are going to come from. Some of the big Arab states, the likes of UAE and Saudi Arabia, have said that they're not willing to commit money unless there's a clear governance structure and an international security force in place before any money can actually be spent. Steve Witkoff saying that the funds will be north of $50 billion to do so.
Bloomberg Horizon's Middle East and Africa anchor, Martina Pasecci, thank you for that update. Plenty more coming up. We'll get back to Japan with market analysis on what that female Prime Minister could mean for these markets. Coalition talks in focus. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks gain on easing trade tensions between Washington and Beijing. Investors in China looking past the weakest economic growth in a year, while Japan rallies on news of a coalition deal. Ukraine's President Zelenskyy calls for the war to be frozen ahead of peace talks with Russia and before those talks can take place, as President Trump shrugs off concerns that he is being manipulated by Vladimir Putin. Plus, the Israeli military says it will return to enforcing the ceasefire in Gaza after carrying out airstrikes on Sunday. It says they were in response to an ambush by Hamas in which 2 Israeli soldiers were killed. Let's get back to the markets then. Equity markets on the front foot then, and it seems largely tied to an easing, at least when it comes to the rhetoric coming through from President Trump and his team vis-à-vis China. We know that Scott Bessent, the Trade Secretary, will be meeting with his Chinese counterpart later this week. European futures pointed to gains of 0.8%. FTSE 100 futures looking to add 35 points. S&P E-minis up 0.4%, and Nasdaq 100 futures with a look ahead to a big week for earnings, with Tesla kicking off on Wednesday. The Nasdaq is looking to add 0.5% on the Nasdaq 100. Let's split the board and have a look cross-asset. Treasuries, we saw a big rally, of course, across Treasuries last week on those credit concerns linked to some of the regional and smaller banks in the US. Today, though, the 10-year is back above 4% on the benchmark. Euro-dollar at 116. Strength of the single currency, even as you get that downgrade from S&P for France from AA- to A+. The euro's up 0.2%. Brent at $61 a barrel, just shy of that. Down 0.5% on oil, with an eye clearly on the trade talks as well. And gold just up, just shy of 0.2% at 4,258. Let's get more on these markets right now with Sree Kochugovindan, senior research economist at Aberdeen, joining me bright and early around the desk this Monday morning. Sree, always great to get your insights. Let's start on US-China then. We've been whipsawed. The markets have been whipsawed by a change in tone. It's not the first time we've seen that. Do we start to build positions along a view that there will be some kind of détente, at least between the two sides?
I believe so. I think what we've seen is an escalation, a de-escalation, and then back again. So there's a bit of a, as you say, a whipsaw here. But ultimately, it's not in anybody's interest to continue escalating from here. And I think that from the US perspective, obviously critical rare earth materials are so essential to different sectors, different parts of the economy. It's very hard to then really continue in this manner. So I think ultimately we'll have some sort of détente, but let's not forget that then we'll have bouts of escalation again. I think this yo-yo pattern is probably our new normal. So we'll have a period of stability in terms of the rhetoric coming out of the White House, and then we're likely to see some more tensions further down the line, maybe in a few weeks or months down the line. So I just think this is our new normal. Trade negotiations take a long time to really finalise, and I think whether it's China, maybe later on down the line it'll be Japan, I think this is just the world that we're in for the coming 6 months at least.
OK, so that yo-yo effect will be there, but for now it's not irrational for the markets to be positioning for, at least on the surface, a positive outcome when it comes to US-China, when it comes to the presidential meeting. That makes sense at this point.
It does make sense, and I think ultimately we'll see what happens at the APEC meeting in Seoul. I think that is still in scheduled bilateral meeting between President Trump and President Xi. So that is all on the horizon there. That will be quite critical in terms of markets, but ultimately it's in their interest to come out, even if there's nothing solid or concrete, they will come out hopefully smiling, and that is enough for a détente.
Japanese equities are rallying as well.
Yes.
You're seeing the Nikkei is currently up at 3%. And this is on the reports that there is now a coalition agreement that will allow Sanae Takaichi, it seems, to be the next prime minister and the first female prime minister in Japan. The challenges for the current or the incoming government then for Japan, what's top of mind for you?
Ultimately, whoever gets in, it's a minority government. So I think it's very positive that Takaichi has managed to get a coalition deal together with the JIP. That's great. They are just shy of a majority there, just 2 seats shy. That's about as good as you can get. The problem is there are lots of challenges. Domestic policy is going to be very difficult because of that minority government. Getting policy through will be challenging. So I think a lot of the more extreme commentary that we heard earlier in the year from Takaichi, that's really been toned down. I think that's quite telling. In that some of the more expansionary fiscal policy may not actually happen. But I think coming back to this particular partnership, they are both quite, they both support fiscal easing. And what I would point out is one challenge is the consumption tax. That is very controversial. It's a big revenue generator, but it's something that the JIP are quite keen on cutting that consumption tax or lowering it to some extent to help support households. But I think ultimately what they should do, what they're more likely to do, is targeted support to deal with the cost of living crisis.
Do you think markets are overestimating the impact that this dovish government will have on the BOJ that had seemed intent to gradually and slowly raise interest rates?
I think so. I think ultimately this is not the first time the Bank of Japan has come under some pressure politically, and they generally tend to just ignore it completely. They will not. Governor Ueda does not get drawn into political comments, anything about the election. And I think what they are very clear in saying in all of the speeches, I mean, we can interpret timing in different ways. My view is that they will wait until January for the next hike. But I think ultimately they need to see sustained inflation pressures, particularly in that core inflation. And at the moment, what they're seeing is it's food prices, really, ultimately, that's driving headline, at least, in Japan.
OK, so watch for the BOJ to go again in January. They'll look through this, arguably, and so we'll see if that comes through early part of next year. We had, of course, this downgrade from S&P for France, for the sovereign debt of France, from AA- to A+. Mohamed El Erin of PIMCO, formerly of PIMCO, I should say, saying that the surprise move is likely to add pressure on French bond spreads and it shakes confidence at the very core of Europe.
Yes.
Is that fair?
I think a lot is actually priced into OATs and into bond spreads. I think what we've been saying is that it's going to be quite elevated. Yields in France will remain quite elevated because there is this ongoing risk. So, yes, we have some sort of political truce at the moment. There's a prime minister in place for now. And I think the outlook there hasn't really changed. The fiscal outlook looks challenging, again, in France as well as in Japan. Fiscal outlook is challenging. The ability to come together and decide and agree on policies has been restricted. And so it's unlikely to see yields come down meaningfully from here. So elevated with bouts of volatility as headlines come out.
So do you want to be positioning for a budget clearing by this year?
I think they'll probably roll over the existing terms into...
You think they roll over rather than come through with a new budget this year?
I think there is a possibility of a new budget coming through, but ultimately that would be good news. That would be good news, and that could lead to yields coming down a little bit. But ultimately, I think a lot of that's priced in already. I don't see any sort of big changes in the yields from here.
Sree, thank you very much indeed. Going through all things US-China trade, of course, what's happening in Japan, and the downgrade coming through for France as well, and the context and the views around that. Sree Kochugovindan, Senior Research Economist at Aberdeen. Thank you for that analysis. Let's get back to geopolitics right now, because Ukraine's President Volodymyr Zelenskiy says the war with Russia should be frozen along current battle lines before the two sides can enter into peace negotiations. His comments come as Vladimir Putin continues to demand that Ukraine cede the entire Donetsk region in the east.
If we want to stop this war and to go to peace negotiations, to urgently and in diplomatic way, we need to stay where we stay, not to give something additional to Putin because he wants.
OK, for more, we are now joined by Bloomberg's Tony Halpin, who leads our Russia economy and government coverage. Tony, what do we understand that President Zelensky means by freezing the war? What specifically does that entail?
Morning, Tom. Well, he's basically arguing, as he has done for several months now, for a ceasefire so that they can get around the table and begin peace negotiations. And it's notable that that's also President Trump's view. He expressed that, saying they should cease along the current battle lines. And the one party in this war that isn't interested in a ceasefire is President Vladimir Putin of Russia. He has always argued that he's not interested in stopping the war. He has really no incentive to cease fighting while he can continue to bomb Ukraine and try and make some advances along the battlefront in eastern Ukraine. So far, he's not been given any incentive and he's not facing any pressure to stop.
We're also seeing reports, the Financial Times included in this morning, that there was essentially a shouting match, Tony, between President Trump and President Zelensky at their meeting last week. It ended in a shouting match, and that there were examples of Mr. Trump essentially echoing the talking points of Vladimir Putin, because, of course, the meeting between himself and Zelensky came after that phone call. And so, according to these reports, President Trump was literally, in some cases, mirroring the kind of language that we hear from the Kremlin and from Putin. What do we make of this in the the context of this renewed push for some form of ceasefire?
Yes, I mean, from a Ukrainian and from a European point of view, it's a depressingly familiar picture that they think President Trump is in a position to apply some pressure to Russia, to bring them to the negotiating table, and then walks that back after contact with Putin. So, yes, we're expecting a summit meeting in Budapest between Putin and Trump. It's not clear if Zelensky will be invited to that meeting yet. We don't have a date for it, but clearly that's going to be the arena at which they're going to thrash out many of these issues. And so far, at least from a Ukrainian perspective, it's very difficult to see how they can come away with the sort of concessions from Russia that Zelensky is seeking. Putin is very hard line on territory, and so far Trump doesn't seem inclined to put pressure on him to walk that back.
OK, Bloomberg editor Tonya Halpern with the context on the latest when it comes to Russia and Ukraine. Thank you. Now to some other stories making the news this Monday. Kering has agreed to sell its beauty division to L'Oreal in a deal worth €4 billion. Kering only launched its beauty division in 2023, acquiring the high-end fragrance label Creed for an estimated €3.5 billion. But Creed is now being sold to L'Oreal as the new CEO, Luca De Meo, seeks to turn around Kering's fortunes. And thieves who carried out a brazen daylight robbery at the Louvre are still on the run, having stolen priceless items of the French crown jewels. The robbers used a furniture elevator to reach the first floor of the museum in Paris on Sunday morning and then used power tools to cut through the windows. 8 pieces of jewellery were taken, including a crown made with more than 1,300 diamonds that was dropped and left behind. The US president says he will impose fresh tariffs on Colombia after describing the president of that nation as, quote, an illegal drug leader. Donald Trump also announced that all US aid to Colombia would be halted, writing on Truth Social that drug trafficking had become, quote, the biggest business in Colombia. President Gustavo Petro responded by saying that, quote, Trump is being deceived by his advisors. Coming up, we're going to speak to Martina King, chair of legal AI startup Luminance, on the impact of the legal sector and the changing nature of work. We have that interview next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, consultancy firm EY Parthenon says software and computer services saw the biggest rise in profit warnings among UK-listed firms last quarter. The sector posted 10 warnings, up from 6 in the previous quarter. One of the headwinds is the emergence of generative AI, which is increasing uncertainty. Well, AI is also transforming the legal sector. Martina King, chair of AI legal startup Luminance, joins me now for a discussion on how it can transform the industry. And Martina recently won Entrepreneur of the Year at the GP Bullhound All-Stars Award. You can see the award centre stage on and around the desk for us in the studio this morning. Martina, thanks for coming in on the back of this award. And you won that for your deep experience, of course, and everything you've done in the tech space in the UK. But, of course, notably, you were the CEO of Featurespace when it exited, successful exit earlier this year to Visa with a price tag of around 700 million or thereabouts. What does that experience, building out a tech company which was focused on fraud software prevention company here in the UK, successful exit, about how to scale and grow successful UK tech companies in this environment?
Thank you, Tom. Thank you for having me on the show this morning. I think the first thing is it can be done, and here we are, living proof of that. So I think the first thing for me was when I joined Featurespace. It was at the end of 2012, and I know it seems almost bonkers now, but hardly anyone was even talking about AI. It wasn't in our vernacular. And when I was first introduced to the technology, the idea was, well, how will this change the world? So we imagined a whole host of different use cases. But of course, for AI to work brilliantly, you need large data sets. And for our technology in particular, live data sets was really where the secret sauce was. So coupling our invention alongside huge, great live data sets, where are they? How do you find them? Well, what we've seen with the large language models is the big internet companies have got all access to that. But it was when we were introduced to the payment sector, that's when we realized we might be onto something special. And we built the business purely around protecting real-time payments. So as our everything was moving online with regard to the way in which we financially live our lives, of course, the adversary out there, the criminal, is working, and using now these technologies as well to be able to steal our money.
Yeah.
And so we just worked really hard to build a business that would be the best in the world at protecting our consumers' payments. Our customers were banks globally. Mm-hmm. And of course, those customers were saying to Visa, this technology is really special and good. They have excellent teams, but they wanted to enhance what they were doing with Featurespace's technology. So it showed that we can build businesses here in the UK and scale them globally.
And it's also a reminder that you've been working on machine learning, because that underpinned Featurespace since 2012, so well before the advent of ChatGPT. And now you're at Luminance, the AI firm that is focused on solutions, AI solutions within the legal sphere and the legal space. What your chair now of Luminance, what are your priorities in that role? What are you hoping to achieve with Luminance?
Well, that's a good question, Tom, because the job of CEO is very different to the job of chair. So my job really is to support the executives, to make sure that I'm working collaboratively with the board, and that I'm really supporting Eleanor in her job as CEO, and she's doing a phenomenal job. So it's really to have the experience that I've had at Featurespace, be able to support Luminance through its scaling journey.
How defensible is the moat for Luminance? There's an argument for some that these generalizable models, like OpenAI and Anthropic and others, will essentially become so good that they'll start to eat the lunch of the vertical models, of which Luminance is an example.
So in my experience, there isn't anything yet that I've seen that enables the general AI to be able to outperform specialist AIs. That may change in the future, but for now, we're in a really wonderful space. And of course, it's not just the model itself, but it's all of the tools, the UI, the workflows, everything else that go around to be able to make sure that the product is special and perfect for the task that it's been set up to achieve. And in Luminance's case, obviously, that's improving the life of people who are contracting. So
which legal jobs are going to be most resilient, do you think, to the kind of products that Luminance is building?
Well, I think this is a really interesting question. Will AI disrupt our jobs? And it was something that I was particularly interested in really early days at Featurespace. What, in my experience, I've seen is that we don't lose jobs, but jobs change. So what do I mean by that? We had fraud experts, and they were working alerts, and those alerts were all false alerts. So what we were able to do is be able to give them the most risky alerts to work on, and that improved the quality of their jobs. In Luminance, what we're seeing is exactly the same thing. So I was at their customer conference recently, and what the customers there said is that on NDAs, so legal departments spend a long time putting non-disclosure agreements together, 30% of their time was spent on that, and that's now gone because they can delegate that to the AI. 80-page contracts can be reviewed in moments as opposed to hours and hours and hours with specialist legal teams. That hasn't affected the number of jobs. What that's done is it's made the jobs that the lawyers are doing much more interesting because they're able to work on more value-added tasks.
Martina, we're leading up to earnings season where some of the big tech names are going to be reporting. There is this growing anxiety about a bubble in AI. If we take a step back and given your experience of Featurespace and now at Luminance, is it your take more broadly that AI is overhyped at this point?
I've lived through a lot of bubbles and crashes. What I've seen over the years is that the companies that are the cream will always rise to the top. So I think the task is to make sure you're spotting the companies that build for the product, that build for their customers, and it's the customer voice. Ultimately, it was a customer voice that really sold Featurespace, and it's the customer voice that I think, when I'm watching what's happening at Luminance, is going to really make the difference.
OK, Martina King, thank you very much indeed. Chair of Luminance and winner of Entrepreneur of the Year at GP Bullhound All-Stars Award. And a reminder that Bloomberg Tech, the summit, is taking place in London tomorrow. We're going to be examining the future of Europe's tech sovereignty. Among the industry leaders, we will be speaking to the CEOs of CoreWeave, Pigment and Helsing. Plenty more coming up. Stay with us. This is Bloomberg.
Obviously, more headroom would be good, but there's always trade-offs because, of course, to build more headroom, you would have to increase taxes further or cut spending further. But we'll continue to manage that balancing act. But I recognise that in a world as volatile as it is today, having a bit more of a buffer can help.
UK Chancellor Rachel Reeves signalling her intent to boost a wafer-thin £9.9 billion fiscal buffer. Reeves set to present her autumn budget next month, of course. So we will get our budget, but France, will they get theirs by the end of the year? We have another downgrade, unscheduled, this time from S&P on Friday to the sovereign debt, of course, and the sovereign rating of France from AA- to A+. Mohamed El Erian, formerly CEO, of course, of PIMCO, saying the surprise move is likely to add fresh pressure on bond spreads. We're seeing that in terms of the futures as well. French bond futures showing a bit of a sell-off. It shakes the confidence at the very core, according to Mohamed El Erian. How much of this is priced in already? Moody's comes through with their decision, which is scheduled towards the end of this week. But clearly, the Prime Minister, Lee Kuan Yew, who has survived the confidence vote last week, now faces that challenge of passing a budget. We continue to focus on OATs and the sovereign debt of France. Let's flip the board and have a little look ahead to a big earnings week. We get Netflix, but also the start of Mag 7 as well, with Tesla kicking things off on Wednesday. The focus, of course, is going to be to what extent these companies, particularly the hyperscalers, are going to come through with numbers and earnings that will justify the high valuations, and will it keep that AI momentum going? So far, the nods coming through from the likes of TSMC and ASML suggest that there is further momentum. Again, Tesla kicking things off when it comes to Mag 7 on Wednesday. Let's flip the board and have a look at Apple, talking of Mag 7. Year-to-date gains of just 1%, but there's counterpoint research that comes out today suggesting there's pretty strong demand for the iPhone 17, up in terms of sales 14% compared to the iPhone 16 in the first 10 days, both in the US and China. And in terms of sales in China, almost double versus the iPhone 16. So some good news there coming through from Apple ahead of their earnings as well. Bloomberg Terminal users can get access to these charts and others used throughout the show, of course, at GTV Go on the Bloomberg Terminal. The opening trade is up next. This is Bloomberg.